Good afternoon, everyone. It's Coram and Justin Nielsen here with a look at the stock market for Monday, May 8th, where we saw a mildly mixed day for the major indexes, but still a couple of notable stocks to check in on, Justin.
Yeah, we'll take a look at advanced micro devices, AMD, and also Netflix. And finally, another look at Las Vegas Sands and the gaming industry.
Let's do it. First, let's take a look at the major indexes. So as I mentioned, a mildly mixed day. On the upside, leading things was the NASDAQ, up 0.2%. The S&P 500 also up fractionally today. On the downside, the Dow down 0.2%, and the Russell 2000 down 0.3%. So Justin, after Friday's strong gain, pretty good to see the indexes holding at those levels, and at least as of now, not giving much back.
Yeah, and I think during our IBD live session this morning, I kept on referring to, oh, it's nice to see a pause. I mean, I said it so many times it could have gotten turned into a drinking game or something. So that's exactly what we're seeing right now. We had such a strong day on Friday, and the problem there was that there really wasn't anything to buy, and that still may be the case, but the pause here kind of gives stocks a little bit of a chance to catch up, set up, and potentially give us something to work with. There's a lot of things that have to happen on the internals,
Right.
not just the indexes, but under the surface with the breadth and more strength in individual stocks and a little bit of a shift away from defense. And we saw a little bit of that today, so that was nice. But we just have to see more of it. And one day, 2 days does not a trend make. We kind of just need to see that get a little bit more sustained as well.
Yeah, and the difficult thing here will be, Justin, if we do see a continuation of strength and a breakout here for the NASDAQ, is that going to be the time to add more exposure, or is that strength going to be the signal to lock in profits with a volatile, choppy, sideways market and seeing things start pulling back in at that point, just when they start looking good? Because it seems like that's what's been happening.
Yeah, I mean, if you just look at this NASDAQ chart, you can kind of see every time it hits this 12,200 and change level, that's kind of where the pause happens. And while the action has been tighter lately, which is good, the problem again is that not all the stocks have been participating. In fact, what's been going on with a lot of individual stocks is they've been in their own trading ranges, and so they keep on hitting their heads at the same level, and it's a little bit of this rinse and repeat. Now, eventually, what we expect is that the indexes will break through this level. We just don't know when and if this is the time. So the more times you kind of hit your head against it, the more important that level becomes. So when we do break above it, it's going to be interesting.
Yes. All right. Well, now let's also take a look at the S&P 500. And it was able to pause today as well. We're looking at the 4195, 4200 level here for the S&P on the
Yeah,
upside.
and the S&P 500 has been a little bit weaker. It got punished a little bit more by banks, and oil stocks have also been kind of under pressure. So this is a little bit weaker than the Nasdaq, but again, it's holding up well. Supported the 50-day moving average line. Now we cleared that 21-day moving average line. We closed above it on Friday, and you can see how the low cleared it today. So these are all good things. Again, we just kind of need to see more of it. And for us, we're looking at those levels of the February 2nd highs for both the Nasdaq and the S&P 500.
Yeah.
But if we kind of just shift before we look at the other indexes, it's worth taking a look at the equal weighted indexes that we've been doing for a while, just as a way to kind of compare and contrast. So for the S&P 500, we look at RSP, and so if you pull up RSP.
And then there's RSP. So you
Yeah,
can see
so
the big difference between where we are
right,
currently
exactly.
and the February high.
Yeah, so when you
Sorry,
take
that's
those
why I paused. I was kind of waiting for you to say about the comparison of the February high, but here
okay,
we are.
sorry. So the whole idea here is that these when you take out the market weighted components, and look, there was some strength in Google, and Meta's been looking good. Apple has been going forward, but when you take out those big market weights, the overall indexes, or the stocks underneath them haven't been showing nearly as much strength, and that's what RSP is showing us. So we are still kind of at this level of the 50-day moving average line that we're trying to get above. So for as strong as the S&P 500 looks, this RSP still has a ways to go. And QQEW, just to
Hmm.
contrast with the Nasdaq, that's looking better. Because growth is still leading here, but it's not nearly as strong as QQQ,
Hmm.
which has already kind of uh,
Yeah.
gotten into highs and is stronger than even the Nasdaq composite. So it again just kind of really emphasizes how narrow this market is, and that's what makes it tough. I mean, if you have those few stocks that are working, maybe you're finding things okay. If you have the indexes and you're playing them all right, not kind of buying them at the top, maybe things are okay. But right now, it's still again tough to make progress. There's a lot of sector rotation, and again, not as many stocks that are looking as good as the indexes.
Hmm. And now let's take a look at 0TNX. This is the 10-year Treasury yield, seeing it climb a bit today and now back above that 3.5% mark. We are going to get more inflation data this week, I believe, Justin.
Yeah, I mean, this is something that we're going to be continuing to have to grapple with. Not only are we looking at the economic data for what that means for inflation, but also for recession. I mean, the jobs report was something that I think people took some solace in terms of maybe this soft landing is still possible, but we're in tenuous territory. Any little difference here and there can swing things to and fro. So it'll be important as this data comes out. It's going to be, hey, what's the Fed going to do this next time, for inflation, but also what does it say for the economy? And that's something that was a big focus this earnings season as stocks were coming out with their earnings reports. Guidance is always important, but I think guidance was even more important this time because
Right.
people were really trying to get a sense of what that means for recession. But it's interesting that the 10-year Treasury yield, has been going up here the last couple days. So now it's approaching levels. Usually you wouldn't think the moving averages would make that much of a difference here, but you're getting right up there to the 200-day moving average line and the 50-day moving average line, and a level that has been kind of resistance here for the 10-year Treasury. So it's going to be a matter of seeing, does this get higher? Because right now, a lot of people are looking at the Fed saying one thing about
Yeah.
how serious they are, and that rate cuts are not coming, but the market is kind of saying a different thing. So eventually, we'll have to figure out who's right,
Hmm.
and that'll be once that gets resolved. I think we're going to know a lot more information.
Yeah. And we'll definitely be staying on top of this for our audience. So thank you for that, Justin. Couple of sector and thematic ETFs to look at. Here's XLF. Closed off highs, but bank stocks are continuing their bounce after a terrible week last week. Got a little bit of relief on Friday. But Justin, it seems like a number of bank stocks have been way better short ideas in the short term than trying to play these little bounces. And I remember you saying that you had shorted an individual bank name, seeing a weak rally into the moving averages and a rejection there.
Yeah, and the question is, did it get overdone? Well, a lot of times you get a bounce when too many people go on one side of the boat, right? And
Yeah.
everyone is kind of thinking, okay, we got to go short. So you have to be careful of that. But this was another issue that I had with Friday. Is certainly there were a lot of bank stocks that were looking strong, and to a certain degree, a little bit today as well. But the charts look horrible, right? So
Yeah.
if that's one of the things that's kind of helping drive strength in the indexes, is that something you can really hang your hat on? So it's worth keeping an eye on XLF here, which is the Financial Select Sector Spider Fund. But this is not providing a lot of buy opportunities in this area. So we have to kind of look elsewhere and see where else we can find strength to kind of prop up the indexes a little bit more, get them over
Hmm.
that resistance, and again improve that breadth. It's okay if you don't have every sector participating. Some are kind of sitting on the sidelines, but for a while here, it's been tough to find any sector truly uh, carrying the standard bearer of leadership for very long. They will carry it for like a week and then give it up to another sector. And so
Yeah.
if we can kind of get more of that trending, I think that'll be
Hmm.
something stronger. And while we're here looking at XLF, it's worth mentioning that gold has been one of those things where we've been seeing a little bit more of this shift to the um, you know
Hmm.
to the shiny metal. And a lot of times that is seen as a defensive play. A lot of the gold here got that support at the 21-day moving average line. It was showing a little bit of strength today after pulling back last week. GDX, which is the gold miners, is also, I think, worth watching. A lot of the miners look very similar right now. So a little bit of a pullback here, a little bit of a pause, there's that word again. But the gold miners are still looking very interesting. And if you take the long-term perspective there, let's go to the weekly or even the monthly chart.
Yep.
um, you can see, well, actually, let's go to GLD in this
GLD.
regard. Yeah. You can see that we're kind of at this level of long-term potential highs here. So again, this is going
Yeah.
to be a really important area to be watching and see if we can overcome this very long-term resistance that we've been hitting our heads against with gold.
Hmm. And also, while we're here, a quick check in on Bitcoin. Here's the BITO ETF, because some have said perhaps this is a safe haven area. And it seemed like last week it was doing all right in the face of the bank woes. And, even when gold was getting hit last week or the week prior, it seemed like Bitcoin wasn't really acting in the same way. But what really can hit Bitcoin? Any headlines related to the Bitcoin exchanges
Yeah.
tightening up or, drama there. And that's what we saw today.
Yeah, and we've been down that road before, of course, with some of the scandals that have happened with
Yeah.
some of the individual firms there. But you're right. I mean, this has been showing a lot of strength again uh, in the face of weakness in the markets, where this has been kind of looked to as a safe haven, which again is just so so strange for a lot of people that it's kind of serving the purpose of a risk on, but also
Yeah.
safe haven.
Right.
It's very much of an oxymoron here, but certainly it's something to watch. Of course, today the action was really kind of related to Binance and what was going on there. But this is definitely worth watching. I mean, falling below the 50-day moving average line is kind of a shot across the bow. So we'll just have to see if this is something more serious to come out of
Hmm.
this.
Hmm. And we've got a couple more ETFs to look at. Speaking of the defensive tone in the market, XLP, the consumer staples ETF. Now, Justin, this isn't really an area where we want to see a prolonged leadership mantle position for.
Yeah, and one of the things that bothered me is how strong this looked. I mean, it was kind of, wow, this is a decent looking pattern, and it's really climbed up that right hand side. So now it still looks decent here. I mean, this pause almost building a handle for the sector spider ETF here. But what I'd like to see is a little bit more weakness. If we can just kind of get away from the consumer staples, you've got such leadership in food names. I mean, we've been talking about Hershey's, which is
Right.
looked so much stronger than a food stock normally would. But
Mhm.
if we can kind of get away from some of the staples uh, and the
Right.
defensive areas and the safe haven gold type stuff, and back into the growth, which was leading
Mhm.
to start this year, that's one of the things that'll be more of our style of investing. And
Exactly.
so something we're keeping an eye on.
Yeah. And when the broad market was making its advance and a lot of growth stocks were acting well in early January, well, what was XLP doing? For the most part, it was falling. So there is that relationship to consider. It doesn't often happen where growth stocks are leading while staples are leading. Does it seem that way to you, Justin? I mean, I guess
Right.
unless everything is swimming in the same
Yeah.
direction.
And this is where you can pay attention to that blue squiggly line, the relative strength
Mhm.
line. So, when you have that relative strength line going up for the consumer staples, that's something that bothers me a little bit more.
Mhm.
So it has flattened out, but it is in an overall uptrend. So again, what I'd like to see is a little bit less relative strength here. I don't need it to tank. I just need it to not lead,
Yeah,
so that's what I'm
right.
looking for.
Well said. Okay, and just a quick check-in on SMH, the chip stocks making improvements today, reversing higher by about 0.5% here, adding to Friday's gains. So clawing its way back. We have this convergence of the 50-day line and 21-day line. It wasn't all too long ago where it looked like a lot of chip stocks were left for dead other than NVIDIA, but
Mhm.
maybe we're starting to see some signs of life.
Right. And this is where I want to see, in groups like this is where I want to see more of that relative strength, kind of like what you saw at the beginning of this year, but, kind of peaked there in March. So, yes, we had a pullback and that's fine. But I do want to see groups like this and IGV, which is the software, um, you know, uh,
Mhm.
more of these showing relative strength versus the
Right.
XLPs.
And hey, I mean, the silver lining potentially could be we like buying on bounces after pullbacks. That's what they're showing now, but can they follow up and can they sustain it?
Yeah,
Is the
absolutely.
question. Okay, and so speaking of chip stocks, here's a look at AMD. This really was flexing its strength today with a gain of about 5.8% in above average volume, 3 above average volume gains in a row. Earnings came out last week. It had round tripped and then some, Justin, from a prior breakout, but seeing it snap back so quickly to retake the moving averages is pretty encouraging.
Yeah, a nice bounce off the 200-day moving average line. And then today we really kind of decisively moved above the 50-day moving average line, also crossed a downtrend line, crossed an area of previous resistance around 88. So, I mean, you've got it exactly right here, Ali. There's all sorts of lines that looked really, really interesting today that AMD was kind of crossing above today and the last few days. In addition, we're also seeing some volume behind this move. I always like to see that volume accompanying big moves like this. And so having 3 above average volume days as it powers higher has also been good. But you also have to put it in perspective of, as you mentioned, there's NVIDIA, which is kind of the leading the leading one in this group right now. So with a lot of these other ones that are maybe not as strong, you have to worry about, hey, am I getting the also ran? So that's the question with AMD. Is it as strong? Can it power higher like Nvidia, or is it going to do okay but not be as strong?
Mhm.
So this is definitely worth watching. I think the action here is promising, and again, this helps SMH and a lot of the other chip makers. But um, you know, I guess we need to see more stocks looking like Nvidia and less that are bouncing off of the 200-day moving average line,
Yeah.
getting some more distance above that line.
Yes. Next on our list is Netflix NFLX up 2.6% today. Didn't quite have a strong volume behind its move, but powering above its shorter term moving averages and arguably presenting an early entry in this space, Justin.
Yeah, not sure if the writer strike is something that is making Netflix a little bit more attractive to people, since it has a lot of things in the can already and
Mm.
can kind of sustain people's interest with its library. But certainly, what was interesting about today was that it was crossing this downtrend, kind of tacked on this handle for a cup. And now it's crossing above that. It was enough for us to put this on Swing Trader, and as you mentioned, the volume wasn't above average, but if you kind of compare it to the last couple weeks, it was up there
Mhm.
for the volume. So it's not as great as it could be, but it's not a complete disaster.
Mhm.
Unfortunately, volume has not been accompanying a lot of these moves,
Yeah.
but at least it was the heaviest. Around the heaviest that we've seen
Yeah.
in the last couple of weeks. So that's the
Exactly.
silver lining there.
Yeah, and I think what would the preference be? A strong price close with a slightly weak volume, or strong volume and a not so great price close?
Yeah,
I'd take a close near the top.
exactly. I'm with you.
All right, and last but not least, let's check out Las Vegas Sands. After a cup with handle breakout above 60, spent a little bit of time in the buy zone. Now it's pulled back, offering a second chance, perhaps.
Perhaps, and I like the support here at the 21-day moving average line. Lots of volume coming in on the upside there. The pullback, not so much volume there. So I like that there hasn't been much volume on the downside. It's really just kind of holding, taking a pause, if you will. So again, I think this is one that is offering a second chance. We are seeing more strength in this area. Now, there is that kind of China fear. We for a while kind of had Chinese stocks in the penalty box, and Las Vegas Sands. I mean, the reality is they have a lot of China exposure with their Macau properties as opposed to their Las Vegas properties. So there is that risk, but right now it's getting support in all the places you'd like it to. At that previous level of resistance, at the 21-day moving average line, and it still looks viable right here.
Okay. All right, Justin, thank you so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So we hope you join us, investors.com/IBD Live, for all the details on that. We'll see you there, and we'll also see you right back here tomorrow at the close. Have a good one.